Holdings for the day. Just a quick, update on the markets on the week gone by. We had a good equity market globally, where European market, emerging market, and our market participated in the rally, and we again clocked the all-time high. The Nifty crossed 9400 levels, and it precisely closed at 94 for the week gone by. On the global scene, European and emerging market did show a robust rally into the play after the France elections, and it was conducive for the market. The person who became the president of France is more on the side of the capital market, and that is what was perceived globally as a good factor. However, US market saw some profit taking coming into the play, and they ended the week on a negative note. All the broader indices were down from 1% to half a percent kind of a cut was seen. The broader market in the US in this calendar year has shown weakness. They have underperformed the headline indices of Dow and S&P 500. So a concern does seem to be developing in the US market for a intermediate correction into the equity basket happening. Having said that, let me come back to our market. Our market continues to rally strong, be firm, primarily on account of liquidity flows which have been improving from both DIAs and FII side. And secondly, the earnings season so far has been very good. Earlier it was BFSI segment which was leading the earnings pack, and now even the consumption space has shown resilience and a good strong momentum coming into the play. For the likes of Godrej Consumer Product came out with a robust set of numbers. Almost double-digit volume growth was seen across its verticals. Same was the case with Asian Paint, which clocked over 10% kind of a volume growth. And the other spaces like cement has been quite robust. Now the mid-cap and small-cap cement companies have been delivering their numbers, and then again a volume growth traction as well as bifurcation traction has been seen. Titan on the Friday delivered their numbers, again a strong set of numbers led by jewelry segment sales, which saw 55% kind of a real sales growth in that segment, and which constitutes around 80% of the total top line of the Titan. It was primarily driven by benefits of demonetization, where shift from unorganized to organized play was seen, and then this theme of shifting of unorganized to organized play is now working well in the market. So we hope going forward auto ancillary and other related companies are going to gain from this shift. GST rates have been finalized by the government. There are 4 slabs which will be there, and this week we will see they will come out with entire details of the sectors which will be the rates will be applicable to. So that the market will await and see which are the sectors and what are the rates which are applicable to them, and then the entire clarity would be there on GST as well. So again, the rates have not been very aggressive, and going by what they have guided, we feel that more or less it would be a neutral kind of a scenario from previous excise and custom duty to the migration to GST. So not inflationary in nature, and tax neutral is what the expectation is from the market. But the benefit is that again, which was triggered by demonetization itself, the shift of unorganized to organized, and that is what the play and the theme will be going forward into the GST. Just a touch of caution on the FII front. If you look at the FII participation till that last week, what they did was around 2800 crores of buying in the cash market segment, but at the same time they were sellers of 2800 crores in the derivative segment of index future. If you look from last expiry till date, around 27th of April was the last expiry day. So market has rallied around 100 points on Nifty. In the same period in the cash segment, FI has been totally neutral. The buying and selling has matched around slightly 150 crores of net buy which has been seen. But in the derivative front, what they have done is they have reduced their put option long, net put option long by 20,000 contracts, but at the same time they have added on to index future shorts and reduced their index future long. So to the tune of around 80,000 contracts. So overall, if you see what they have done in the derivative segment, where we club everything, index futures and index option all put together, around 56,000 contracts of short positions have been created by the FIs in this segment, and against that no cash buying has been seen. So they are still playing the market with a touch of caution, and some shorts they have built into the system against their longs, previous longs of the cash market segment. So they are playing safe. DIAs have been pumping money into the cash market segment, and of late, last week, they were also seen a profit taking mode. On the market-based scenario, it has been evenly distributed. So again, a cautionary flag is being raised where we have seen sectoral rotation happening, which is helping the indices notch higher highs, but at the same time, the participation of the market is not very widespread. So that again, we can see some sort of a correction. My own sense is that we may have a correction coming into the market of say Nifty 2% or 3% kind of a correction, but it won't be a fall. So there's no scenario where you are going to see a market crashing and then you don't have a visibility when it will come up. So correction is always healthy for a market to give fresh buying opportunity, new players to come into the market, new trading positions to be created, and that is what we expect. So we would be buying all the corrections, and if the monsoons are in line, and the predictions by IMD has been it would be a normal monsoon, and already pre-monsoon showers are witnessed in some parts of the country. So going by that, and public sector bank earnings are being awaited, if all falls into line, we do think that we would be racing very fast on the markets going forward. So our call is stay positive on the market, buy the corrections, stick to cyclicals like BFSI segment. Banking sector is the space where one should be sticking to. Auto ancillaries, cement and metals, along with infra. These are the places where value picking and cherry picking will be seen. And going forward, the volatility is likely to be bought into. So that is all. Thank you.